Now, China, following the path of the United States in many ways, more automobiles, higher protein consumption in meals, and lots of, well, easy money. So far, it's all working. The economy grew 7.9% in the second quarter. This isn't a surprise to my next guest. Jing Ulrich is the chairman of China Equities at JPMorgan Chase. Jing, it's good to have you back. Thanks for coming in. So what kind of prognosis do you see for the second quarter? Is this going to be a blowout time for GDP growth in China?
Well, in the second half of the year, we see continued strong momentum in the GDP. In the second quarter, we already had 7.9%. And I think in the third and fourth quarters this year, GDP growth will surpass 8%.
And is this all based on what's going on in the domestic economy, not the export economy?
Well, the export economy continues to struggle. In the first several months of this year, exports plummeted by 20 to 25%. However, despite that, we've had very strong growth in domestic consumption. Car sales are booming, infrastructure programs are well underway, and personal computers and home appliances are selling very, very well.
Now, when you look at the sort of build-up to all this, whether it's stockpiling of copper, iron ore, coal imports, oil imports, all up dramatically when you look at the time frame this year versus last year, is that set to continue as well?
Well, you know, in the first half of 2009, commodity imports were amazing. We had 2 million tons of refined copper imports. That's up nearly 200%. Aluminum imports surged by 20 times. China was actually a net exporter of aluminum in the same period last year. However, this year, China became a net importer. Even coal, that's a resource that China is actually self-sufficient in. However, coal imports also surged. This is an indication that the domestic economy is actually performing much more strongly than people expected.
All right, so let's translate that into the equity markets. Is that set to continue? And so should investors be piling into natural resource companies that supply China with all these raw materials?
Well, that's one area investors can focus on. Natural resources are very important to the future growth of China. And in general, China is cash-rich and resource-poor. So in the future years to come, China will be importing a lot more resources. Now, in terms of equity markets, as you know, the Shanghai market is up some 90% so far this year, one of the best performing markets in the world. The Hong Kong market has actually lagged that of China. It's performed very well. However, China has outpaced Hong Kong by a long way. So investors may actually consider buying some Hong Kong stocks at this juncture.
Now, when you look at the Hong Kong market and those Hong Kong stocks, are there any specific industry groups that you would say, pay attention, they have lagged the general market and therefore they're set to rise?
Well, some infrastructure companies have actually lagged the general market. Railway companies, they've done well in the market downturn because they were perceived as relatively defensive. But in the rising market, the railway construction companies have actually lagged. But going forward, we see very strong orders coming in the railway sector as part of the overall stimulus program. So those companies are set to do very, very well. Also, in general, we are advising investors to focus on domestic consumption. Chinese consumers are getting wealthier. They're getting more confident in the overall economy. So if you look at the general consumer market, from sporting goods to department stores, things are really humming along very, very well.
Well, indeed, there was a report that came out today from McKinsey & Company talking about how by 2015, China will be ranked number 4 in the total number of wealthy individuals.
Well, you know, we have quite a lot of billionaires in China already. And wealth creation is tremendous in China. In fact, China has the number 2 in terms of numbers of billionaires, just after the U.S. already. So every day, we've got no new wealth creation, we've got the middle class emerging, and the sheer number of the Chinese population means China will become one of the most important consumer markets in the world.
All right, we're going to continue the conversation more with Jing Ulrich, the chairman of JPMorgan Chase's China Equity Business. We're going to find out, what about all this domestic stimulus? They followed down the path of the United States spending money. Will this all come to grief with a credit crisis? We'll find out. This is Taking Stock on Bloomberg.
What you're seeing happening in emerging Asia, not just in China, is encouraging. I think it provides some basis for, again, cautious optimism. that we're going to start to come out of this over the next few quarters.
Treasury Secretary Timothy Geithner on China from his exclusive interview with Bloomberg's Peter Cook. This is Taking Stock on Bloomberg. I'm Pim Fox. The domestic economy in China means more than just consumers. It's about large infrastructure projects. Here to help us understand the capital needs is Jing Ulrich, chairman of JPMorgan's China Equities business. Jing, when we talk about the needs of capital, it seems as though the government is saying yes to everything in China right now. Is that wise? Are they going down a road that will lead them to a credit crisis later on?
Well, I don't think so. You know, the Chinese government's balance sheet is extremely healthy. They're in a fiscal surplus, and Chinese households are also enjoying very strong balance sheets. The indebtedness of Chinese households is, again, very low. People have mortgages, but there's very, very little other consumer lending. Now, in the first half of this year, Chinese banks have tripled their new lending. In terms of absolute amounts, new lending amounted to 7.4 trillion RMB. That's nearly 1.2 trillion US dollars. So that's equivalent to a quarter of China's full-year GDP of 2009. So huge surge in lending, which clearly is not sustainable. If this persists for some time, we could have some NPLs emerging from the banking system.
Now, you talk about NPLs, non-performing loans, right? Because they're kind of seeding the market with so much money that some of those loans are bound to be poorly executed.
Well, you know, if any banking sector, whether it's China or the U.S., if
Correct.
Any banking sector is lending a quarter of the country's full-year GDP in the first half of the year, one should begin to worry about asset quality. Now, in the first half of this year, most of the bank lending has actually gone into large-scale infrastructure programs and government-sponsored programs, as well as state-owned enterprises. So credit quality is okay, but we need to watch out. Sometime down the road, maybe 2-3 years from now, some of the loans may go bad.
Now, you've taken a look at what's going on in, let's say, the property market in China. We were talking during the break about how there's been a reversal of government policy to try to push lending, and that seems to be working. What was the reversal, and is it possible we could get another reversal and have the government say, wait a minute, you're lending too much too fast?
Well, the reversal came in the fourth quarter of 2008 when the global economy was plummeting, when China's growth rates also plummeted itself. Now, we've had a reversal in government policy back then. Basically, the government went from a tightening policy to an expansionary policy. So that has fueled the rally in the stock market and in the property market in the last 6 months of this year. Now, going forward, investors need to watch out for signs of an asset bubble. So far, things are okay because the economy is still on the recovery path. However, if property prices and other asset prices, such as the stock market, go up too much, we may see the government changing its current expansionary policy to more of a neutral stance and potentially tightening stance.
What do you say to investors who are worried about the government's stance versus U.S. Treasury holdings? Do you think the Chinese government is likely to sell any of those treasuries?
It's very difficult. The current holdings of U.S. Treasuries amount to some 770 billion U.S. dollars. That's roughly 25% of all U.S. Treasuries outstanding. China also holds some $500 billion of agency bonds here in the United States. So if you add everything together, that's 1.3 trillion U.S. dollars of fixed income securities in the United States. Given the large position, it's very difficult for China to diversify away from the U.S. dollar anytime soon. But in the future, China may consider buying more commodities, such as gold and copper, just to have a bit of diversification.
And if indeed this is something that the Chinese government pursues, this diversification policy, should that make investors in U.S. Treasuries run for the hills?
Well, not yet. Because to diversify away from $1.3 trillion of holdings would take a very long time. And also on top of that, China's foreign exchange reserves are still growing. In the first half of this year, reserves grew by 180 billion U.S. dollars. So China incrementally is still a net buyer of U.S. Treasuries.
A net buyer. That should give some hope to investors in U.S. government paper.
Well, that's true. I think the Chinese government purchases have kept U.S. interest rates low for some time. And of course, that's helping the U.S. economy recover at this critical juncture.
What's the perception of investors in China? You mentioned, for example, that China has the second largest number of billionaires in the world after the United States. What is the perspective right now about what's going on in the United States from China?
Well, from China, I think people are looking at the U.S. economy with intense interest, given the U.S. economy is still the largest economy in the world. It accounts for some 18% of Chinese exports. Also, the Chinese investors are watching the banking sector, the property sector here in the U.S. very, very closely, because at the end of the day, the two countries are so interdependent. What happens here in the U.S. matters a great deal in China.
Let's take politics off the table. I know it's difficult in the real world, but for example, take politics off the table. Would the Chinese investor like to buy, would Chinese corporations like to buy more investments in the United States?
Absolutely. Many of the Chinese middle class wants to send their children to school in the U.S. They want to own homes in this country. And of course, the U.S. has many, many wonderful brands that China would like to own and purchase. But obviously, there'll be a lot of difficulties, when China makes these purchases. That's why China is on an outward investment drive. China goes to Africa, Latin America, where perhaps Chinese investments are much more receptive.
All right. Well, we're going to have to wait and see what happens in the future, and we look forward to having you as our guide. Thank you very much, Jing,
Thank you.
coming in, the chairman of JPMorgan's China Equity Business.